Welcome to a new startup selling webinar, Insurance Agency Lead Gen in a COVID-19 Era. Today we're going to cover the most lead generation centric activities that insurance agencies and brokers can consider. And we're going to start it off with appointment setting. And fortunately for us, my partner John Scranton's on the line. And John, why don't you take us through appointment setting for insurance agencies and brokers?
Thank you, Alan. I'd be happy to. We're big fans of appointment setting for insurance agencies because we find that it provides a very fast, rapid ROI. It takes the least amount of time to go from beginning to actually closing business, potentially out of all the lead gen centric activities you can do. There's some key elements to making your appointment setting initiative effective. The first is a very compelling pitch, something that's going to make prospects want to engage and speak with you, a quality list of prospects to target or suspects to target, a professional appointment setter who can dial the phone efficiently, effectively, but most importantly, convey your pitch and have an intelligent conversation with the prospect. And lastly, a receptive audience, a group of people that is open to talking about insurance as opposed to a group that's very closed and riddled with gatekeepers. We've found the greatest confluence of all these factors happens in the transportation industry, where you're very easily able to acquire prospect lists with X dates at a reasonable level of accuracy. You also have a receptive audience who spends a lot on insurance. So if you attack them with a compelling pitch and a good appointment setter, you have a great recipe for success. Secondarily, you can also succeed with appointment setting in other blue-collar niche markets. However, the caveat being you need to be able to come up with your own quality list with X dates because that content isn't as readily available as it is in transportation. So Alan, why don't you tell us a little bit about the second lead gen activity, pay-per-click advertising?
And John, before we leave the appointment setting, a couple of quick questions back to you, which is, so you have some examples on the prior slide for appointments by power units. So if an agency was going to ROI that, so let's say we take the middle one, 5 to 25 power units, they're going to get 21.9 appointments per month. So let's just round that to 22 appointments per month. Let's say the average was 10 power units. Would that be for a pipeline $10,000 in commission opportunity times those 22 appointments?
Yes, that's correct. So it takes a very modest closing ratio to generate a positive ROI, maybe even in the end of the first or second month. These statistics you see on the screen are composites of actual client projects based on an average investment of a little over $2,000 per month. So not an extraordinary investment. However, we feel a pretty extraordinary opportunity.
So for about $2,000 a month, on average, an agency would expect to see 22 appointments worth about $10,000 in commission each?
That's correct.
So ROI wise, one close and you're done actually for several months, correct? But that's very powerful, and that's one of the reasons you like appointment setting so much. The other is that the list with X dates is readily available.
Yeah, big opportunity,
Yep.
fast ROI, and this has been a really compelling program for our clients, both before the COVID-19 era and during.
And perhaps the only caveat is that an agency should have some experience with trucking and access to markets, correct?
Yes, absolutely. You need some producers that understand the language of transportation. And of course, you need a home for that business. You need to be able to place the business. Otherwise, you can't put the revenue on the books.
And how long have you been collecting metrics like this? How long have you been running trucking appointment setting and other types of appointment setting for agencies?
I think our company's been doing this for about 15 years. These metrics are based on the last 2 years, so more current data.
The current metrics. Very good. Great. So let's move on, as you said, to the next area. Another rapid ROI opportunity for agencies and brokers is PPC, pay-per-click advertising. Well, why is that, fast? a fast potential ROI? Well, the first thing is you can really target your market. That's on Google, YouTube, LinkedIn, and Facebook, the big platforms. There's differences between these we'll talk about in a minute, but it offers tremendous granularity in who and how you go after them. So for example, you could say, I want these ads to target manufacturers and distributors in the Western United States with at least X employees or X revenues, with at least 100 employees, or 5 million in revenue, but no larger than 1,000 employees, for example, or, $1 billion in revenue. And here's the states that I want to target, and I want to exclude certain other aspects or industries. I want manufacturing, but I don't want pharma, for example, or bio or any type of manufacturing that's out of your area. And then you get to also target titles. I want to target. You might be selling benefits, so you want CHRO and VP of HR and director of HR and CFO, for example, CEO, owner, depending on the size of the company. Or you might be on the risk side, the P&C side. So you want to include risk manager, the C-suite, but you don't want to include CTO, for example. So really great granularity in PPC, which of course is one of the reasons Google derives so much revenue from it. But LinkedIn is coming on really strong for B2B. Now, how do you decide which one of these platforms to go after? Well, if you're B2B, you're going after businesses, LinkedIn is often the place to be. LinkedIn has, really senior level people. It attracts businesses. Most businesses are on LinkedIn and pay attention to LinkedIn. If you're going after manufacturers with 100 employees, for example, or distributors or tech, that's the place you want to advertise in. And you have a choice of a display ad or actually having it come up right in your feed. So there's some really good opportunities with LinkedIn. You can include groups or exclude groups. It's very powerful. Meanwhile, if you're going smaller, then Google and Facebook might be the place to be. I'll give you an example: owner-operators for trucking or small fleets for trucking. Facebook should be the place you look for your leads, and there's some really great PPC advertising opportunities for Facebook with that. And like LinkedIn, better than LinkedIn, tremendous granularity and how you can go after that. If you are video proficient, if you have some compelling videos, for example, Startup Selling does this. We have videos where they've been seen by 30,000 insurance agents. So if you have great video, you can use YouTube and advertise on that platform, but you really need to make sure you have a great video, and you should also have a great YouTube channel before you start. So summarizing, PPC offers you flexible branding, content. You could do display ads, you could do post boosts, you can have an ad directly in feeds. A lot of great opportunities with that, and it's highly targeted, as I mentioned. So what's the downside? You don't need a list, by the way, so that's another great thing. As John mentioned, for blue collar niches for telemarketing, you have to assemble a list to go after people. So what's the issue? Cost. Two aspects of that. One, the cost to advertise, and you're going to have to do at least $2,000, $2,500, $3,000 a month for the cost of the ads to pay Google or LinkedIn to run ads. But then you also have the management costs for Startup Selling or an internal cost on your own to actually manage, create, manage, monitor, refine, A/B split test, C/D split test, multivariate test to make sure your ads are going well and you're driving that ROI from those ads. So that's, in a nutshell, that's a quick overview of PPC. Great opportunity, not necessarily the least expensive opportunity out there as far as investment.
Thanks, Alan. One quick question. You mentioned LinkedIn groups, and I know a lot of our clients who target middle market and even larger accounts are using LinkedIn advertisements. How do groups factor in? Are our clients using groups, and is it successful?
So groups, there's a lot of options with that. It's a really good question, but you have a choice of including groups, for example, in your LinkedIn ads, or targeting groups specifically for your LinkedIn ads. So let's get back to the benefits example. Well, some of the HR groups in LinkedIn are absolutely huge, hundreds of thousands of members. And what the group does is it says, oh, all the people in here in this group will be interested in HR related content. So you're already starting, you're fishing in the right pond for that. The downside is, for example, that there may be people in the group that are a lower targeted title than you want, for example. So when we look at that, we look at how big is the pool in general, because the pool can't be too small. LinkedIn has certain requirements. And then do we need to add groups, for example, to expand the pool? Or is there a particular group or groups that are really specifically applicable to your target market?
Thank you. So the last, but certainly not least, lead gen centric concept we're going to talk about today is email marketing. And with email marketing, the most important thing is building a quality list. Without a list, obviously, you can't succeed. You have no opportunity for success. And we help many of our clients build their lists. There's very few agencies out there that have large, comprehensive, accurate, opt-in email lists on their own. So we assist in procuring spam testing, ping testing emails for our clients to try to help improve their odds of success. Additionally, when sending an email campaign, you need some type of high quality content or collateral, case study, webinar, something that your prospects, suspects, or even clients will be interested in receiving, learning about, and will derive value from. Otherwise, they're going to find your emails very easy to ignore. We like email marketing because you can quickly engage prospects and potentially improve retention when you're sending to clients. And also, it has a long shelf life. We'll often receive replies to our own email campaigns that were sent out 3 months ago because somebody finally stumbled across it in their inbox. Or there will be a collateral piece from an email, such as a web seminar recording or a case study that somebody saves, they view later, they respond to later. However, it can take a little bit of time to hit the positive ROI with email marketing. It's not as quick as turning the fire hose on with PPC or appointment setting. There's a little bit of time needed to build the rapport with your audience, to begin engaging them in a dialogue, and then of course to finally receiving inbound leads, forms, replies, etc. So Alan, did you have any questions about email marketing, or should we wrap it up?
So email marketing, John, you mentioned it has a long shelf life. So it's a great digital asset to build over time. And there's also the issue of canned spam compliance and opt-in compliance. Two different things, of course. So with agencies, they have to remember that they have to ask people to opt in as they're building their list, very important. They have to be canned spam compliant. There's about 8 key factors to that, including, making sure people have both an automatic and manual opt-out that's managed, and it takes a while to kind of build. But once that engine's running, it could be one of the great drivers for leads. How large is your list for start selling?
We have about 100,000 insurance agent emails in the United States.
And that took how long to build?
Years. Yeah,
Years.
maybe 5 years or so to ramp up to that level.
But now, having used it for 10 to 15 years, of course, it's this great digital asset. It needs to be refreshed periodically, and it always needs to be. You need something called list hygiene done on it to make sure that you're taking out your opt-outs and your retirees. But what percentage of your business now is derived from email marketing?
It usually hovers somewhere between a quarter and a third.
Very important foundation then.
Absolutely.
Email marketing. Well, with that, John, if there's nothing else, why don't we wrap it up?
Yeah, anybody who's watched today's webinar, please feel free to contact us. We offer insurance agencies complimentary marketing and lead gen reviews. We can talk to you about how any of these lead gen centric options, appointment setting, PPC, or email marketing could help your agency thrive during this COVID-19 era. With that, this webinar is now ending. We hope you all have a great day.